Hello friends, I'm Mirjan Hippolito, a Forex and cryptocurrency expert at Traders Union. Today, we will explore what Elliott Waves are and how they can help predict market movements. What are Elliott Waves? Elliott Waves are a technical analysis tool based on the idea that the market moves in repetitive cycles, following a specific wave pattern. These cycles reflect market participant behavior, from euphoria to panic. In total, there are 8 waves, 5 impulse waves reflecting the main trend direction, 3 corrective waves moving against the trend. Wave 1, beginning of the trend. Wave 2, first correction. Wave 3, strongest and longest. Wave 4, short pause. Wave 5, final upward thrust. Then comes the corrective phase, waves A, B, and C. These waves help the market cool down before starting a new cycle. Analyzing waves helps traders identify the current market phase and potential entry or exit points. This method is particularly popular in Forex and cryptocurrencies due to their high volatility. Mastering Elliott Waves requires practice, but it can significantly enhance your trading strategy.
Can Elliott Waves be applied to any market?
Yes, especially effective in liquid and volatile markets like Forex and crypto.
Is special software required?
No, but graphical platforms that allow manual wave plotting are convenient.
Can it be combined with other indicators?
Yes, traders often combine Elliott Waves with Fibonacci levels, RSI, or MACD to confirm signals. Subscribe to the Traders Union channel to stay informed about other powerful technical analysis indicators. See you soon.